You're with Palanch here on NDTV Profit, and we're going straight across to Ashok Reddy, Managing Director and co-founder at TeamLease Services. We were scheduled to have a Skype conversation with him, but the line's proving tricky. The stock is down 1%, not bad, given that the overall market is trending lower and much more substantially so. If you take a look at the Q2 performance of TeamLease, it's up on your screen. What you've got as far as total income is concerned is a 722 crore number, and profit has moved up smartly to the 9 crore mark. Margins, though, EBITDA margin under pressure. How would you describe, Mr. Reddy, this quarter? What's it been like, Q2?
So I think if you really look at it, I think there are three things that we are really focusing on. One is the aspect of revenue growth, second is margin improvement, and third is the vertical growth or inclusion into the overall company play. So I think on the revenue growth, we are kind of on track with what typically the quarter two of the year is. We have about 40-42% of our overall revenues coming in the first half of the year, and the balance comes in the second half of the year. And I think that's roughly how it is played out for us. The margin improvement at an EBITDA level, actually even at a PBT level, has seen a considerable growth, way over the revenue growth, which is a function of the productivity play that has happened in the organization with the various technology implementations, and to some extent at a PBT level also, because in the first half of the year we had the funds from the IPO that were earning interest and some write-backs that we have from the old collections. At a net profit level, clearly an improvement that we have, and I think all of this reflects that we are on track overall to what we had indicated the business will play out to. We've also concluded the two IT staffing acquisitions, and the second half of the year will see the comprehensive play out of those two acquisitions into the performance of TeamLease. So I think overall we are on track and have a strong base for the second half of the year.
When you say we should see the comprehensive play out in the second half of the year, can you ring fence that with some numbers?
Don't want to put a guidance, but overall we have been growing at a 20+% over the last 7 years. Our belief is that should be sustainable. We are clearly showing a margin improvement, which will also continue to play out into the future.
Okay, just reflect a little bit on the business environment in H2. What you think will be supportive, and what do you think could be slightly disruptive? What's on your watch list, essentially?
So we do see a seasonality in the second half of the year, which is primarily driven by the festival season and everything else, and largely in Q3. And we do see that demand kicking in Q3, effective from October onwards. So with October having completed, we are seeing clearly that element of a bump up in numbers on that front. The second element is also, I think, the continued play out across industries and companies. So we've added nearly 300 plus companies as incremental clients in the second quarter of the year. Most of our clients don't come on with large transitions. They start small, but I think getting them on board gives us the leeway to grow with them into the future. So I think the acceptance of temping, the potential for growth, and demand across sectors is still playing out quite well for the staffing industry.
It's too early to call it, but we're all sort of living this demonetization drive of the governments. And, pundits are looking at the impact this could have on various sectors, certainly disruptive in the, immediate term or the short term. Your own thoughts on how that could affect, client plans in Q3?
So, as a staffing company and the formal sector play, we cater to corporates and employees where everything is by check or bank transfer.
Sure. I didn't mean it like that. Sorry, I didn't mean it like that. I just meant that,
I'm just continuing thereafter to say that, however, 98% of the outsourcing that happens in India is in the informal sector. And our hope is that the demonetization and flushing out cash transactions will hopefully drive this element of informalization into the formal sector. which effectively means the potential opportunity for the staffing companies increases substantially.
Sure. But, you know, could it play out, begin to benefit a company like TeamLease, say this year or...
No, not immediately.
No, not really. That's what I just wanted your thoughts on this, since this is the raging topic of the moment. Ashok, Reddy, thank you very much for your time. Apologies for some of the technical issues. Good talking to you today.
Thank you very much.
Thank you. We'll take a break and we'll continue to review quarterly performance. This time it's Thermax. MS Unikrishnan, Managing Director of the company, joins us.